All right, let's get right into it. If you're operating a non-banking financial company in India today, you know the regulatory landscape is shifting under our feet. Today's explainer is going to demystify the RBI's stringent cybersecurity mandates for your NBFC. Because here's the thing, this isn't just about checking boxes for the regulators anymore. It is entirely about securing your digital foundation. So we're going to break down exactly what the Reserve Bank of India expects from you, and more importantly, how you can actually turn that compliance into a strategic business advantage without slowing down your growth.
Here is our quick roadmap for today's explainer. We'll start with the compliance imperative, move to the cost of non-compliance, map out the audit roadmap, look at key areas of focus, and wrap up with the strategic business benefits.
Section 1, the compliance imperative. This is where we build your foundation of trust.
Look, in India's incredibly fast-moving fintech space, regulatory compliance is absolutely not just paperwork, it's the very foundation of trust that holds up your entire lending business. Let's define exactly what we're talking about right off the bat. This RBI NBFC audit is a mandatory shield. It's an assessment designed to rigorously evaluate your IT governance and overall cybersecurity posture to ensure the confidentiality, integrity, and availability of all your financial data. But the absolute key phrase to remember here is risk-based approach. The regulators aren't looking for generic one-size-fits-all security. They are looking for specific, hardened resilience tailored exactly to the digital services you offer.
So, what does that actually look like in practice? Well, it means aligning your daily operations with specific RBI requirements based entirely on your size. Whether you're a systemically important entity, an NBFC SI, or a non-deposit-taking one, an NBFC ND, the rules adapt to you. It also means ensuring your IT policies are active, living shields officially approved by your board of directors. Honestly, these can't just be dusty documents sitting in a drawer. They need to be breathing governance structures that your leadership is actively validating.
Moving right along to Section 2, the cost of non-compliance. Let's talk about the severe existential risks.
And here is where things get incredibly real. Let's say you have an unpatched API or a slightly insecure mobile lending app. That isn't just an IT glitch, it is an open door for hackers. The real risk translates directly into compromised borrower data, immediate financial fraud, and a massive wave of lawsuits. We're talking about a total loss of investor and public trust that can destroy the reputation you've worked so incredibly hard to build.
Furthermore, think about disaster recovery. Operating without a genuinely tested business continuity plan is like driving on the highway without a seatbelt. It's one thing to have a backup plan written down somewhere, but if that plan isn't tested, a single cyber attack or a server failure could freeze your operations entirely. If your critical financial services go dark, your business effectively stops operating, leading to immediate devastating financial loss.
Which brings us to the ultimate penalty. Non-compliant IT frameworks can literally force the RBI to shut down your business. They have the absolute authority to impose crippling monetary fines, severely restrict your day-to-day lending operations, or, in the worst-case scenario, completely revoke your license to operate. So yeah, the stakes literally couldn't be higher.
All right, take a breath. Section 3, the audit roadmap. Let's look at how to actually secure that digital foundation. Don't panic. We're pivoting to the solution right now with a very concrete framework. What we've done here is logically condense the highly complex compliance journey into 6 clear, manageable macro phases. By breaking this absolute mountain of technical jargon into these specific sequential steps, you get total visibility over what the audit actually entails from start to finish.
The roadmap kicks off with categorization and scoping, identifying exactly if you fall into the base, middle, upper, or top layer so the right rules apply. That's followed immediately by governance and a gap analysis. This is where you audit your IT structure and literally put it side by side with the RBI's master directions to spot exactly what's missing. This early phase is absolutely critical. It's all about knowing exactly where you stand today versus where the RBI says you need to be.
Then comes the technical heavy lifting. We're talking deep dive vulnerability assessment and penetration testing, or VAAPT, across your web portals, applications, APIs, the whole shebang. Plus, you go through a rigorous cyber resilience review where they stress test your incident response and disaster recovery to guarantee zero downtime. This is where your systems are actively, aggressively probed for weaknesses before the bad guys can find them.
Finally, you receive your remediation guidance. Think of this as a highly specific technical to-do list. It translates all those complex audit findings into actionable, straightforward fixes. You patch up any remaining compliance gaps, and then, boom, you issue the formal audit certificate required for RBI submission. You walk away 100% compliant.
Section 4. Key areas of focus. Let's check under the hood of your daily operations.
So what exactly are these audits scrutinizing on a daily basis? The focus is intensely zeroed in on 4 key areas. First, strict adherence to master direction frameworks. Second, digital lending security, and right now, this is huge. Every single touchpoint from loan origination down to collections must be ironclad. Third, third-party risk management, because let's face it, your security is only as strong as your weakest vendor or cloud provider. And finally, mandatory, transparent reporting for your board and management.
Now, a critical question your compliance officers are definitely asking right now. How often do we actually have to go through this whole grueling process? Is this a one-and-done setup or an ongoing headache?
The magic number is 1. Generally speaking, it is an annual requirement. Just one comprehensive audit a year sets your baseline. But, and this is a very big but, you have to stay vigilant. If you do a major system upgrade, like entirely overhauling your core lending app, that triggers the need for a fresh assessment. You can't just cross your fingers and wait for the annual review. That new security needs to be validated immediately.
Which brings us to our final section, the strategic business benefits. Let's turn this into a major competitive advantage. Let's completely reframe how we look at this. Stop viewing it as a massive bureaucratic tech list. A clean audit report, that is a remarkably powerful asset, especially during funding rounds and debt market assessments. By protecting your borrower's data with true enterprise-grade encryption, you aren't just blindly following rules. You are guaranteeing business continuity, future-proofing your fintech against increasing regulatory scrutiny, and signaling to the entire market that you are a highly mature, trustworthy institution.
I think this quote from Cyber Ambassador really hits the nail on the head. We don't just find the problems, we stop the risks. It perfectly captures the proactive mindset your NBFC must adopt. Compliance shouldn't just be about identifying what's broken after the fact. It's about proactively leveraging a strategic partner to do the heavy lifting, stopping risks before they ever materialize, while you focus purely on scaling your lending business.
So, as we wrap up this explainer, I want to leave you with a provocative thought. When it comes to massive RBI penalties and the hard-earned trust of your investors, are you just guessing about your security? Or is your digital foundation actually unshakable? It's time to stop guessing. Take the steps, run the assessments, and transform your mandatory compliance into your ultimate competitive edge. Thanks for joining me today, and keep learning.